That's the first thing that's really interesting about this space. But how much harder or how much easier was launching the second and the third and the fourth product compared to the first one?
It's a good question. So I would say for a while, a lot of the products we were launching were single asset products. So each of the products was just solely and passively invested in one currency. So certainly as we kept rolling out more single currency products, we not only began to learn some lessons along the way and smooth out some speed bumps, but we also were able to get them into market faster and continue to kind of replicate on the success of the previous products we had launched. I'd say one of the first, really big challenges for us was when we really decided it was time to launch a different kind of product, a diversified fund, where the fund would be legally structured as something different, as well as own multiple assets in the fund as opposed to just a single security. Just a single digital asset, all packaged within a single security, a single investment offering. And so that was certainly an exciting opportunity for us. And that is when we launched our digital large cap fund, our fund that really helps investors make a singular investment, but get that broad-based perspective, that broad-based exposure to the asset class.
Yeah. So it's easier, but there's still challenges, and there's like the different style of products that are being created, which is really interesting, right? So it still has its challenges, but you've got a few more processes now and a bit of a track record and a bit of history, so that probably fraction easier than those first 3 to 4 years. You talk about transitioning to exchange traded funds now, right? Because at the moment it's trusts that then list on the stock exchange, but there's all this, the groundswell that is starting to hopefully move towards exchange traded funds. What's the process there right now? Because obviously, it's extremely early stages right now.
Sure. So I don't know if I'd call it early stages. It's certainly not for us at Grayscale. I mean, we've been working with our regulator here in the US, the SEC, since 2016. Hoping to convert our products to ETFs. I think certainly the first candidate for becoming an ETF would be our Bitcoin product, ticker GBTC, the Grayscale Bitcoin Trust. Now, I think what's been interesting about this conversation is we've certainly had, a very favorable reception from the SEC to have conversations around exchange traded products. However, over the last few years, they've certainly denied some applications that have come before them. And they've cited that there's, a couple aspects of the underlying market for Bitcoin that perhaps gives them, some pause. Things like, there not being enough surveillance of the market or significant regulated sizes of markets, things of that nature. And we seem to be perhaps at a little bit of a turning point. We have a new chairman at the SEC, and over the last couple of weeks, he's actually publicly provided some commentary that does maybe suggest that he and the SEC staff have now become a little bit more resolved with some of those previous concerns, given that they've kind of waved in, publicly the fact that they'd like to, look at some of these ETF applications again. Mm-hmm. Now, what's the distinction that we're seeing now in the market, which is causing a stir within the investment community, is that the SEC seems to be calling out a willingness or a desire to look at Bitcoin ETF applications, but those that seem to be based on Bitcoin futures, without really speaking at all on whether or not they're interested in looking at Bitcoin applications for ETFs that are physically backed, the way that GBTC and many commodity, based products are today. And we think this is a really important point that we really want to stress because, the SEC is a disclosure regulator. They're really here to protect investors and make sure that as investors go to the market, make investments, utilize products, ETFs, and otherwise, that all the right risks are disclosed so that investors are making fully informed investment decisions. And so it would create, Alex, an unfair or unlevel playing field if the SEC were to only approve futures-based Bitcoin products without also creating the ability for spot or physically backed Bitcoin ETFs to come to the market at the same time. And instead, this is a decision that we really think should be up to investors. If you look at assets like gold, there's a gold ETFs that hold gold, and there's gold ETFs that hold gold futures, right? And if you have those both in the market, then investors can really choose which product really fits their needs best, rather than having the regulator be the one to focus on which product may or may not be more appropriate for investors.
It just seems like it's a matter of time right now, right? It seems like
certainly
the momentum is there. It's just how long now, and what's left really to do.
I don't know. I would say through the lens that we look at the world, the crypto ecosystem has continued to mature and continued to evolve, and we have remained committed and unwavering in the fact that we will be converting GBTC into an ETF. We believe wholeheartedly that this product is not only the world's largest Bitcoin product. It holds about 3.5% of the outstanding Bitcoin float. It trades hundreds of millions of dollars a day. It's already an SEC reporting company. We think it is, of course, and remains only a matter of time. It's a matter of when, not a matter of if, this is able to convert to an ETF. And, that's going to be a day that we will all celebrate with a lot of excitement, because it'll be many, many years in the making to get there.
Yeah. And if we can look at our companies like Vanguard and how much, they actually have now because of, the fact that they are like an ETF, this is going to be huge for Grayscale. So that's very exciting for you. I wish you all the best to accelerate that process.
Thank you.
You did mention you hold 3.5%. See, again, last time I looked, it was about 2.5%, but you hold about 3.5% of all the Bitcoin, right? And so what's your approach in the trust? Is it to buy and hold? Is that the strategy?
Correct. Yeah. This is the Grayscale Bitcoin Trust is a passive product. So any money that is deployed into the fund itself is used to buy Bitcoin. There's no synthetic exposure. The fund doesn't even hold a penny's worth of cash. So for investors, who are looking for Bitcoin exposure but don't want to, set up a wallet or figure out how to buy Bitcoin directly, and who also may want Bitcoin exposure alongside stocks, bonds, ETFs, their retirement account, whatever it may be, this is a pretty seamless way to get that exposure right alongside those other investments.
And is there a limit to kind of how many Bitcoin the trust can hold, in terms of the market size, in terms of the Bitcoin in circulation?
It does call into a good question, right? I think one of the things that has and continues to make Bitcoin investable is the fact that it is a scarce asset, a verifiably scarce asset. There are 18 plus million Bitcoin in circulation today. We know that there will only ever be 21 million Bitcoin ever created. And so certainly, that would be a very good problem to have if the product ever crept up against any number that flirts with the outstanding Bitcoin float or outstanding Bitcoin supply. But certainly we are not near that at the moment.
And again, that's one of those good problems to have.
Correct.
You have another 14 products, and you invest in companies like the Basic Attention Token and Decentraland and so on. How do you choose the next thing, right? Because you've got such a good start. Now it's feels like the pressure of choosing the next thing is really, really important. So what are some of your considerations in, the next product or the next digital asset currency?
Sure. Well, again, I think we toe that healthy line between identifying unique opportunities and also listening to investors around what they want. We try to be as transparent, Alex, as possible about this process. So we consistently maintain a list of assets that we're always considering to go inside our investment products on our website, so that investors are never surprised or caught off guard by some of the assets that we may be exploring for consideration. It does not mean that every asset that is on that list will make its way into a Grayscale product, but at least we're trying to signal to the investment community the areas of the market that we're investigating. And sometimes that invites people to share resources with us, share opinions with us, get feedback. But ultimately, when we think about products to launch, there certainly has to be a market fit. We want to really drill into the use case for a given digital asset. Is this a solution in search of a problem, or is this actually have some real world application or utility? We're looking at some pretty basic things as well, right? We're looking at the underlying integrity of the blockchain that underpins this asset. Is it stable? Where does price discovery happen? What are some of the legal considerations around a given asset? How is it launched? Who controls it? We look at things like supply dynamics. Has all of the float for a given currency been put out there? Is it coming online? How does it come online? Where are the assets held? The list, candidly goes on and on. It's a pretty exhaustive process that, thankfully is a very cross-functional, procedure that we undertake as we evaluate assets for inclusion in products that spans operations, finance, legal, research, you name it. And so it's a team-wide effort, to say the least.
That's an amazing answer, because you answered all of my follow-up questions in that one answer. So that's a very good answer. Thank you for that.
Thank you.